I thought this might be a good opportunity since things are kind of slow to just summarize what we've been seeing. So, for the benefit of those in our live trading room, if you are new to the live trading room, this is a market summary that we have been trying to do lately during the market, just to kind of talk about in summation what we're seeing in a variety of signals we see. So let's start first of all with the fact that there was some pending news today. It appears that it left the indexes that we trade, SPX, RUT, and NDX, in somewhat of a flat state for most of the day, just kind of as an expression you use, Michael, chip choppy.
Yeah,
They were bouncing around, between support and resistance. But I think the headline in there's actually a buy signal coming out on RUT right there on our Able Trend charts. But I think the headline for today, and it's very important to emphasize, is patience will almost always win the game for you of trading. And yet trading is something that I encounter a lot of traders who it's obvious that patience doesn't come naturally for them, and they're approaching their trading with a sense of impatience. Now, Michael, you and I have traded together for years, and I think it's fair to say that over those years, you and I have both experienced periods of impatience where we just feel like we need to go do something because
that's right.
because we're bored, right?
That's right. That's right.
Well,
It can be.
well, you don't really want to trade when
Very,
you're bored, right?
no, no. We just want to wait on want to wait on the proper entry signals, no doubt.
Exactly. And so, for the benefit of those who are in the room, we don't always have the Able Trend charts up on the screen, but they are the signals that we're following. And what Michael's showing to you right now are each of the three indexes that we trade. He's showing the 3 9-minute chart where we can see, um, Michael, maybe highlight for them on SPX. You see 3 minute resistance
Yes,
that
right
was
here.
running right there. And you can see how the bar has been basically bouncing off of that 3 minute resistance. On the other side of that pattern, what's causing the choppiness, we've got 9 minute support, right? So if you move your cursor down to 9 minute support right there, and so that's what the chart has been indicating to us. It's a market on SPX that's finding support at about the 2078 level, and it's finding resistance at around the 2082 level. And you can see that in the last several bars that we've been trading in that pattern. Now, there hasn't been a lot of activity for us today. We've taken some small profits today. That was on the buyback of a short leg that we sold yesterday. Nothing significant. Year to date, we are averaging throughout all of the trades that we've done, we're averaging about $2,400 a day. So we have some really strong days, and we have other periods where we have days where we've made no money, and then we have a handful of days where we've actually lost money on those individual days. We have not had a losing week yet in 2016, and I do say yet because I think it's fair to say that if we follow the right strategies, we follow the right guidance, that we are sometimes going to have a losing week. But one of the ways to avoid losing days and one of the ways to avoid losing weeks is by doing exactly what Michael's been doing in the live trading room today. I've actually been absent from our trading room most of today because it was apparent to me that there were not a lot of good signals to follow. There were not a lot of good opportunities. And for me personally, as a trader, having been doing this for 30 years, I find it more advantageous to just step away and go do something else during those periods. I know my personality, and I know that I would be tempted to start talking myself into some trades. A trade that's not really crystal clear will start to look a little clearer to me the longer I go without placing a trade. Have you ever done that yourself, Michael? You just haven't done anything.
Oh yeah, most definitely. I like that. 100% have done that.
Mm-hmm.
The more you look at it, the more it looks okay to do. But then you got to think common sense has to come into that. So
Yes, yes. So, any Anything in particular, Michael, you wanted to highlight on Able Trend? Because I wanted to show this and then maybe show the long-term signals like
Yeah.
the 3090. And then I want to jump over to my bar chart and just kind of give everybody an update on where we're at specifically on NDX, since that's the index we've been tracking mostly.
Oh yeah, no problem. Just start out with the NDX 3 minute chart here. This is the 3 minute, 9 minute chart. These you can tell we're coming right back down to 3 minute support, and it's been been there for the last three, more than that, probably 8 or 9, 10 bars. So it usually bounces off of this and goes higher, and you can see, like Mark said, the SPX, you can see that we're right at resistance, and then the RUT, you can see that we're right at, it has been to support, and then it looks like it's trying to go higher here. But if you focus on the NDX just for a minute, I'm going to flip over to the NDX longer term time frame chart. Let me refresh to make sure we got the proper data up there. So this is a 3 minute, 9 minute chart you were just looking at. So you can tell we're on support here. But if you go down to the 30-90 chart, you can see these are 90-minute resistance levels. And then here is 30-minute support level. So we're in between. Really nothing to do with that right now. No trade, but we've got resistance that we're going to say that we're going to not break through. Could still break through it, but it might not and just be in this range. And then you look at the 60-minute 180 chart, you can see that we have the larger dots are 180 resistance, and the 60-minute is the smaller. So we've got pretty good resistance right there. 44.46 to 44.36 is where resistance is at. It can go through that, of course it can, but that's what we're basing some trades on, that it will not break that level and go higher. But if it does, it does. And
And
then you look at,
if I could just add one
right,
comment about SPX
please.
before you get to RUT, for the benefit of people who might be new in the room and are not as familiar with Able Trend. First of all, Michael and I would both concur, and I don't mean to speak for him, but I know I do in this case. In the 30 years or so that each of us have been trading, because we've both been trading about that long, Able Trend is hands down the most accurate set of technical signals I've ever encountered. And Michael, I know you feel that way also, that if you follow the signals, you can make money.
That's
It's
right.
it's human emotion that interferes and,
That's right.
and gets in the way. But what I wanted to point out there on SPX, you were showing the 180-minute resistance.
NDX, Mark.
I'm sorry, NDX. Yeah, you're right. You were
That's
showing
okay.
that 180-minute resistance, but
Yes.
show where 180-minute was prior to this level. It was at a higher level, right?
Yes, up here. Yes.
And it was at a
Yes.
higher level before that. So
Yes.
when we say in the live trading room we're stair stepping lower, it means that each of those longer term and shorter term levels of resistance are stair stepping lower, and we take that as an indication of a stronger bias to the downside. And as long as we don't break above that, that is a tradable pattern. Now, we take most of our trades off of the shorter term, but that
Hmm.
right there is a tradable pattern. And I would use that to influence trade decisions that I would make.
Yes. Agree 100%. And then then you look down at the 120 daily chart, you can see that we broke the blue dots here are daily support levels, and we broke that on the 13th. Right, well, the 14th, really, the next day, and we continue to go lower. Right now, it's out in the middle of nowhere, is what I call it. There's no support, no resistance. So we'll just have to wait and see, how that works out. The daily chart, I don't really have that much thought about that. I'd rather work with the smaller time frames, which are the 180s and the 90s and the 60s and the 30s. But you still have to pay attention to it. I mean, we had a sell signal come on right here on the 10th at 44.74, and it went to 43.92. So that'll get your attention. But we had support, so probably never took that trade to start with because it's a support level. But anyway.
Well, so my assessment of this, looking at Able Trend, the shorter time periods and the longer time periods, is the longer time periods, and I mean like the 30-90, the 60-180, and then the 120 daily, have some consistency to them when you're looking at NDX. And my interpretation is the consistency is there's a stronger bias to the downside, just because of those levels of resistance that are showing. What's your thought, Michael?
Oh, that's what I see. And I think right now you can see, let me flip back just really quick, Mark, because I want to see this. Um, we're actually broke right through support here. It looks like, and it looks like we're heading lower.
Mm-hmm.
So it should stop at 44.23, but it might not. So we'll just have to wait and see. But
So
that's a
that's
nice
the
gap
three
there.
9 minute that Michael flipped back to, and if we stall at the 9 minute support, then we're still in this choppy phase. If we were to break that nine
Yes,
minute support, then that's just reinforcement of those longer time periods that we were looking at.
yes, sir. Exactly.
So this pattern, I mean, this pattern you see right here with the 3 9 minute is exactly why we pretty much have stayed out of trades today. We took profits today on one trade. We sold to open against an SPX long that we held, a long put. We sold to open a put against that yesterday on the move higher earlier today, where it looked like we might be turning and heading lower. I made a decision to buy to close that short, took a small profit on that. But we like small profits, base hits, and do a lot of them. We also made one other decision, and that was to cost average the long SPX put that we held. And there we are. Those are the only trades that we've made today. And the reason is because this pattern is really just not conducive to us getting into a trend. We want to trade the trend. And when the trend has been identified, it can be very, very profitable for us. We have days, I think our best day so far this year was a $17,000 day, and our worst day was about a $6,000 loss. But we only have a very small number of losing days, and as I said, we're 23 weeks into the calendar year, 23 weeks of trading, and we've not had a losing week yet. So you got to take the good with the bad, and Michael and I both agree, and one of the reasons we um, work so well together in terms of trading together is we both agree that sometimes the best decision you can make is to take a loss, take all your capital back and move on. And if it's a loss on a single position, and that allows you to look at the bigger picture and re-engage that capital into something that's more productive, then that absolutely can be the best decision you can make sometimes.
That's right.
So, Michael, why don't you give me presenter control, and I'm going to jump over to my bar chart, and I'm going to show a very, very simple bar chart view. All right, can you see that okay now?
Yes, we can.
So we've been talking about NDX in particular on the bar chart, and we've been talking about natural levels of resistance, natural levels of support, and those natural levels help us define a range of movement that the indexes are potentially trading in. And I'm sharing this with you on a daily basis as a way to help educate you in better understanding kind of a macro view of what the market is doing. Now, as I've said many, many times before, I take 99% of all my trade signals in terms of I'm getting into a new trade or making a decision to exit out of a trade based on the able trend charts that Michael just showed you. They are very reliable signals. They help us decide when to get in, when to get out, and when to stay on the sidelines. But for me, now this is a very personal thing. Not everybody likes to look at bar charts. Some people want to be very, very focused on only the one able trend charts, the multiple time periods. But for me, it helps me having a perspective of where we're trading relative to the support and resistance, the channel. So what I found very interesting is that, and I'm on a 10-day, 10-minute chart, we had dropped on the 10th down to the bottom of the previous channel, and then we moved up a little bit, and then we started to trend lower. And then it was obvious that we had broken below support of this previous channel. Once we break below support or above resistance, it's up to us to reassess the pattern and determine what the new channel is. We're going to form new channels. We don't always stay in the same channel or cycle. So it's up to us to interpret what that is. And so over the last couple of days, I've been monitoring this series of lower lows and lower highs, which is obviously a declining trend. But what I was looking for is that point in time where we would form a natural level of support that would define a new pattern, a new channel, or a new cycle. Now, initially, what I was tracking is this declining level of support here, these lower lows and corresponding lower highs. It's not exactly the way I was tracking it. Let me actually try to do a little bit better job there. It was actually coming off of this lower low here, or this low here, and then we had a series of lower lows. Now, when we got to a point where we started moving higher and we broke above this declining line of resistance, it was obvious to me, and this is just based on my experience and the way I interpret things, but it was obvious to me that we were starting to possibly form a new cycle. So we were previously in a cycle that had a range of movement of about 60 points, and now this cycle, as defined, has a range of movement of about 63 points. So very similar to what we were trading in previously. We moved higher after this natural level of support, which means that we hit a low and the lows before it were higher and the lows after it were higher. We started to trend higher. We formed a high, then a low, then a higher high, then a higher low. And then today we formed a natural level of resistance where there was a high that was higher than the previous highs leading up to it, and there were highs after it that were also lower than that high. That becomes a natural level of resistance. So here we have a declining level of resistance, declining cycle, and so at this point in time, my macro view is this is the channel that we could potentially be trading in. Now, my definition of these channels, by the way, doesn't guide the market makers as to which direction they push the market. It's just my brackets around the current trading pattern to give me an idea of whether or not we're breaking above resistance or whether we're continuing to trade inside that pattern. So here are a couple of things. If we continue to move higher, I'm going to know very quickly if we're breaking above resistance because we're trading at 44.34 range, and my declining level of resistance is around 44.37. If we hold firm at this declining level of resistance, then we could potentially, if history repeats itself, as it almost always does in the indexes, we could potentially move back down to the lows in this declining cycle. So let's just go out a couple of days and say, well, the low could possibly be 43.61. So I see a level of support around 43.61. I'm, again, not using this to make a trade decision, but there is a certain amount of influence as to the trade decisions that I make. So let me say it this way. If a buy signal came on the Able Trend charts and it was not as strong of a buy signal as some other signals, and there are varying degrees of those signals, but if it was a okay buy signal, I might not take that buy signal because I'm aware of where we're trading in my longer term bar chart pattern. If I saw a buy signal and it was as clear and sound and solid as possible, but I was aware of where we're trading in the cycle, I might still take that buy signal because I don't know that we're not going to break above this resistance. So I might take that buy signal, but the fact that this pattern is in my thought, it's going to influence me to go well out of the money. So for example, maybe a 4,500, just kind of making this up, buy a 4,500 call. And if in fact the buy signal materializes, but the index doesn't move enough for me to turn that into a profit, I can very quickly turn that 4,500 call into a call credit spread that would be out of the money. So it'd be a properly placed call credit spread, which would allow me to transition it into a position that I could still win out of. So I keep this channel pattern in thought. I look for the signals on Able Trend charts, and I place my strikes partially influenced by the pattern as I see it. So I'm sharing this with you because some of you in the room, especially those who are new, will ask why, one time did you buy a long put that was in the money, but then you bought a long call that was out of the money? And that's really the gist for the reason that I'm influenced by where we're trading relative to the pattern, the strength of the signal, and I'm also anticipating that I may need to cover my position at some point and turn it into a spread rather than hopefully just close it. My original intention was to close it for a profit, possibly do a day trade. But if I can't do that, then I need to protect myself. Trading and risk management is the most important part of trading, in my opinion. And risk management doesn't mean that I put $5,000 of risk into the market and then I'm going to lose $5,000. Risk management means I'm willing to put 5,000 of risk into the market and I'm going to make active trading decisions to protect myself against that $5,000 loss. I can, in fact, turn that from a $5,000 risk into maybe a $1,000 risk by the type of action that I just described, taking a long call and converting it into a call credit spread. So those are just thoughts that were top of mind for me today, and I just wanted Michael to share with you his view of the Able Trend charts because he truly is the master at interpreting the signals on those. And there are frequent times where I will admit that after I've been trading for 30 years, I will sit here and look at the signals and I'm ready to go in and I hear Michael talking about other things that he's looking at, and that will influence me also. Word of caution, trying to be conservative. Both Michael and I have an appetite for taking on a certain amount of risk, but it's going to be measured risk. It's going to be risk that we are willing to put in the market, and we know that at no time is the risk we're putting in the market, is it necessary that it needs to be 100% risk. So I hope that's helpful to you. Michael, do you have any other thoughts or comments?
No, great job, Mark. Right, good here.
All right, so Fed news today ends up not really having any influence on the market. Fed's decided to hold firm on interest rates. I have no idea what their plan or strategy is. I'm not sure they do either. Um, I have a bias towards not paying attention to financial media. I was sharing in the live trading room earlier today that an article I read about an interview with Sir John Templeton years and years and years ago, where he was asked the question, what do you attribute your success as one of the all-time greatest investors to? And he said, I don't pay attention to financial media. They serve no value in terms of truly providing information that is tradable, actionable by the average retail investor. And I believe that. I have a lot of respect for people in financial media, and I think that news is important. Just don't make your trading decisions on it. Don't wake up and watch a particular news network and go to the market and make your trading decisions. Have a well thought out trading plan and always, always, always manage your risk first and foremost. If there is a huge, glaring, can't lose opportunity, but you already have your maximum risk on that you're comfortable with, take a pass on that opportunity because you don't want to overextend your risk. You want to stay in the game. And if you're patient, which is the name of the game today, just being patient, there's really no reason you can't win. So I hope this is helpful to everyone. I appreciate you being part of our live trading room. If you've just joined us, welcome. Just let us know if we can do anything for you.